For more on the dispute, let's speak to David Nelson. He's the chief strategist at the Belpointe Asset Management, and he joins us now from Stamford, Connecticut. I guess if you were to use the stock market as a barometer, it looked like Wall Street was in a state of shock late last week, kind of rebounded today. Kind of read the tea leaves for us. What do you read into all of that?
Well, yeah, the markets are very encouraged today, and I was encouraged over the weekend that the measured response that China took last week is going to go a long way to promoting negotiations here in the United States. I think, there's a line in the sand that needs to be addressed here, and the president wants to address what has been in the past, the forced handover of intellectual property and the forcing of U.S. companies being kind of forced to form joint ventures with local entities in China. It's a dynamic we'd like to change. And currently there's a trade deficit, $375 billion with China, and that really equates to a transfer of wealth. And if that's correct, then the United States has been doing that around the world to the tune of about $500 billion a year. So the talks are encouraging. Obviously, the markets reacted very favorably today, erasing all of Friday's losses. Friday was actually the worst day in 2 years. Today was the best day in 3 years.
David, talking about changing dynamics, there are some who say if these tariffs were to go through, it would eventually lead to changing the dynamic between these two very important economies, basically paralyzing U.S.-China bilateral trade because these things have a way of spiraling and spiraling. Is there a happy medium for these two largest economies?
I hope so. I think over the last several decades, through past maybe three administrations, U.S. negotiators have largely punted on a lot of these key issues because they didn't want to disrupt the world order. So the fact that we're talking right now is great news, not just for world markets, but certainly for U.S. investors, and I think Chinese investors as well. I think if we can come to some sort of agreement on some of these very key points here, and already the talks seem to be bearing fruit. I'm very encouraged that Steve Mnuchin is considering going to Beijing. If we can sit down at a table, I think that some kind of dynamic, some kind of meeting of the minds can be made to happen, but sometimes there has to be a rattling of the sabers to make these kind of things happen.
The U.S. Tends to have a pretty big megaphone on this issue, and we hear a lot of the complaints. And Trump, of course, makes a big deal out of the trade deficit. You alluded to it as well, but we all know about these global supply chains. I mean, Apple might have the design for the iPhone. China may do the manufacturing, but internal components can come from South Korea, Japan, elsewhere. Then when China ships it off to the U.S., it's China that takes it on the chin. Do they have a good argument there?
There's some fair points there, to be sure. There's some push and shove on both sides of this. It's not all one-sided at this point. But for the last decade, certainly the playing field has leaned in China's direction. All we're looking for, and I think all this administration is looking for, is the leveling of that and reciprocal trade. I think some of the things they'd like to address is, certainly automobiles, Chinese tariffs on U.S. automobiles are quite high. We'd like to see that lowered. I think we'd like to see an opening of the financial sector. That would go a long way. And if we can get some of that done, then I think you'll see some give back from the United States. Very often, Trump walks back that initial outlay and brings it back to center. We saw that with steel. I think we're going to see that with China as well.
We know about these comprehensive economic dialogues, and as you said, there's been a lot of punning in the past. Alan Rappaport has a piece in the New York Times, and he said this, quote, "On crucial issues, China and the United States appear to be talking past each other, not even agreeing on what's being debated." Do you agree with that?
I don't think so. No, I don't. The New York Times has had it in for this administration for some time. I think they're trying to point out that the Trump administration is not capable of negotiating with China. I think very, very often they're wrong. I think the fact that we're sitting down already so soon after tariffs were announced is testament to the fact that this administration seems to be getting the job done. With steel, it started off as no exceptions. Suddenly, we're sitting in negotiations with Canada, Mexico, the EU, and South Korea.
David Nelson, we'll leave it there. Thanks so much for joining us.
Thanks for having me.